Hey everyone, AI stocks got absolutely wrecked in market trading today, and it had a lot of investors curious, panicking, and asking, are we in an AI bubble, or is the AI bubble popping? So in this video, I'll review some of what's happening around AI stocks. 6 AI stocks in particular I'll review because it all started with Supermicro stock today. It announced when it was going to announce its earnings results, and it didn't give preliminary reports. And so that kind of got investors a little spooked. It started the selling. Supermicro stock crashed by 20%, and then everything related to Supermicro started crashing as well. And then more and more AI stocks, just because they were AI, started to fall. And it really spooked the market. Already valuations were kind of high and investors were on edge, but today's trading really spooked the market. So I thought this would be an informative video to kind of put the whole thing in perspective and get our arms around what's happening around AI and AI stocks and answering if we're in a bubble. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Goldman Sachs approached this question as well. Are we in an AI stock bubble? And their report suggests that investor optimism isn't running as high as it was prior to the 2000 bubble and the 2021 bubble, according to strategist from Goldman Sachs, Ryan Hammond, and his team. The implied level of long-run earnings growth that investors expect right now has climbed to 11% a year. That's above the long-run average of 9% a year, but below the 16% that was expected at the height of the tech bubble in 2000, or the 13% growth implied by the stock prices at the peak of the past COVID rally in 2021. So we're not at those levels yet that were deemed to be bubble-ishous or bubble-like in 2000 and in 2021, according to Goldman Sachs and their report. Now, today's trading, I wanted to separate 3 stocks and 3 other AI stocks. I want to separate the total of 6 stocks that I'll be talking about. Palantir Supermicro and ARM Holdings, and then Nvidia, AMD, and Micron Technology. Now, the first batch of 3 are 3 stocks that I did not have rated as buys coming into this week. All 3 of these, 2 of them I used to have it as a buy. Supermicro I had rated as a buy in January. Palantir I had rated as a buy in January, but the stock prices increased by so much ahead of their earnings that I told investors to take profits several weeks ago, maybe more than a month ago, on those 2. ARM Holdings I never rated as a buy. The valuation had always been too high for me. So in today's trading, Palantir was down 4%. Supermicro, as I mentioned earlier, started the whole mess, is down 23.5%, and ARM Holdings is down 16.7%. ARM is down significantly from the last couple of days as well. But if you look at the other 3 stocks, Nvidia, which is down 10.29%, AMD, which is down 6.07%, and Micron, which is down 5.18%. These are stocks I have rated as buys. In fact, I have all 3 of these rated as and on my list of top 25 stocks to buy. Micron I recently added to the list in April. Nvidia and AMD I've had on my list all year long. So I've had them since January or December 31st. I've had them rated as top stocks to buy. Now, I'm going to make a distinction between these 2 batches of AI stocks, and I'm going to see if you notice something here. So let's look at the valuation here for Palantir, Supermicro, and ARM. And what you'll notice here are big spikes in the valuation for all 3 of these. Look at first in the blue for ARM Holdings. Look how it jumped to a forward price to earnings valuation over 100. It's come back down a lot since then. As I mentioned, the stock price has been coming down. Palantir also, look at this jump in valuation, right? Going from a forward PE of around 40, jumping up above 60. And then Supermicro Computer, which in the last 5 years hadn't traded at a forward price to earnings of over 12 ever, all of a sudden was trading at a forward PE over 40. And so these higher valuations are what caused me to avoid these AI stocks, because they were getting ahead of themselves. The forward PE measures already accounts for the earnings per share expected over the next 1 year. And so already accounting for that, the valuations were still too high. And so these are coming down quickly. Now, let me share with you the other 3 stocks on that list: Nvidia, AMD, and Micron. And you'll notice no spike in valuation, right? Even though these 3 stock prices might be up significantly for the year, the valuation is not up, meaning that the increase in stock price was supported by increases in earnings per share. So the market price increased, but the earnings, the profits also increased. And so when you divide the market price by the earnings per share, you get a similar number. You don't get something that's out of whack because the numerator increased while the denominator stayed flat. That's where bubbles begin. That's where I try to avoid stocks in that category, where the earnings are flat or declining, but the prices are soaring out of whack with the denominator, right? When that relationship starts to disengage is when it becomes really risky. That's when investors should be really cautious about a potential bubble forming in those stocks that get detached from their earnings. And in all cases of bubbles, in all cases of stocks that soar super high and the earnings per share don't follow, there's usually a retracement. There's usually a comeback down of reality, because those two cannot be separated from each other. You can't have a market price that's exploding when earnings per share and profits are staying flat or declining, because then you're just getting a higher valuation, a higher price, and that rarely sticks around for the long term. You need to have the substantiated earnings or cash flow to justify a higher price, right? We would all be willing to pay a higher price for the things that we buy if we're getting more in return. When you go to the supermarket and you're buying a can of soda, that might be $1. But when you go to buy the 12 pack, it might be $10, right? That's 10 times more expensive. Oh my God, it's a bubble. No, you're getting 12 times more soda for 10 times the price. You're okay with that. You're okay paying more because you're getting more. Okay? Similar with companies, businesses, and valuations. If the price has exploded, but you're getting so much more in terms of profits and cash flow, then you're okay with that because you're getting so much more in return. But when the price has exploded and you're not getting that much more, that's when investors start to dig in, do some math, do some calculations, and say, I don't know if I want to be holding this investment that's not giving me the returns in terms of earnings and cash flow. They've been detached. I'd rather own something else that gives me better earnings or better cash flow prospects than this company, just because the stock price has exploded. Now it's a good time, I need to sell it. So that's where I want to make a distinction here. I don't want to lump in every AI stock all together and say AI stocks are in a bubble. There are certain AI stocks that I feel have been overvalued, and I've been talking about that. And I've been telling investors, hey, it might be a good idea to take profits. I said that about Supermicro Computer. I said that about Palantir. I said that about ARM Holdings. I said ARM was too expensive. You should probably avoid that one. But these 3 I've had rated as buys, and I still have rated as a buy. And I think this price decline here in the overall AI sector is giving an opportunity to some of these AI stocks within the group that are justified to have higher prices, because their valuation is not higher, it's actually lower, because they've grown in terms of their earnings and their cash flow. So also, longer term, keep in mind that the market for AI technologies amounted to around $200 billion in 2023. and it's expected to grow well beyond that to over 1.8 trillion by 2030. That's the estimate. So even if we don't hit that estimate, let's say it comes in far below that, and let's say spending is around 1.5 trillion on AI by 2030, that's still more than $1 trillion in growth in AI spending between now and 2030. That's only 6-7 years. So there's a lot of capital going into AI. There's a lot of infrastructure being built out for AI, and companies like Nvidia, Micron, AMD, they stand to benefit, as do the others, as do Supermicro Computer and Palantir and ARM Holdings. They will also benefit. But the only difference is that those benefits that are expected for those three were already more than priced into the valuation. That's what I was thinking, in my opinion. But for Nvidia, AMD, and Micron, I've felt that they have excellent prospects that are being underestimated at the moment. And so, to answer the question, are AI stocks in a bubble? I would say no. However, within the AI market, I would say there are stocks and there are companies, there are areas that bubbles were starting to form. And today's trading activity really brought some of these companies down to better valuations. And it might continue. More of these companies might start to come down in valuation off those soaring prices without the justified earnings and cash flow to back those up. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.